What's going on, guys? How we all doing? Hope everybody had a wonderful trading week, and welcome to episode 5 of Backtest Fridays. Now, like, a lot of the moves that happened and played out this week were some moves that are really like, there are some simple moves, like some simple moves that I was able to give away as little hints, as trade indicators or some trade analysis for you guys. But let's go into some of the moves that were just like even more simpler. GBP AUD on the last episode of Backtest Fridays, the one that we did on the 25th of May. 3 trades to the downside, 3 trades to the known level of support. Right, I'm gonna get this in horizontal line. Bam. Okay, this known level of support that we put on our charts last week, I literally did not touch my GBP AUD chart for the entire week. All price did was literally break this level of support or known level of support from our last video, and act as resistance. This chart is kind of marked up because I was making a detailed breakdown for some of my students, but just to share with you, these are 4 entry opportunities, 5 entry opportunities that you could have got from a simple break and retest of support acting as future resistance. And if you're able to capitalize on any of these engulfing patterns on the broken level of support acting as resistance, like let's just use this area as an average, you've been able to get 75 pips. Plus, if you're still in the trade from the previous week, you'd be up about 379, 380 pips. Like nothing has changed. The market is just continuing in its downward trend momentum. Yeah, simple. Nothing hard about that Aussie trade. Yeah, so let's go over to the DXY. Excuse my markup, as I said I was teaching before, but remember, we'll always use the DXY to kind of map and correlate what Euro US dollar is doing. So throughout this week, DXY came to a known level of resistance, and all it did was reject it. A nice, simple, clean rejection of this level of resistance, creating some form of M pattern if you really look at it in the mix. Let's get my trend line out. Up, down, up, down. I think I spoke about this on my webinar or last Backtest Fridays. I don't remember. I spoke about this pattern being completed on one of those videos. But as I always say, if DXY is going down, Euro is going to the upside. So I remember this trade I posted on Backtest Fridays last week with the little hint, taking a sell from this level of resistance on the back of the trend line and carrying it down to the known level of support. Could have give yourself like a 25 pip stop loss. So a good 88 pip trade. But on the flip side, we have to take in consideration that we have had 3 rejections of this level of support along right here. We had a rejection right here, a rejection right here, and a rejection right here. And if you zoom out to the daily time frame, this is actually a double bottom or triple bottom formation. If you look at it, 1, 2 at this week, and 3 right here, and push to the upside. So we'll probably see a situation like this. Hint, you see me? We'll probably see some form of situation like that, where the market actually returns probably to the back of this trend line and the H4 resistance all the way along this region. That's a probable possibility. Probably some form of possibility along this area that we have the market come back up to this known level of resistance and get some form of rejection off this area. So it wasn't nothing really major on Euro. We just got this sell. I'm gonna go back. This it's gone. Let me put back in the arrows, the lines. I mean, yeah, we got this sell off this level of resistance, and we got this buy off this known level of support and demand region right here. Nothing crazy over here. GBP AUD, I absolutely hate trading this pair. It is the slowest pair in the history of pairs. But along with my analysis I gave in last week's episode of Backtest Fridays, I was anticipating the market to reject this area, but it has been so slow and sluggish to actually reject this area, but as able to get one trade, one proper trade, because most of the trades that I got right here were like some 10-15 pips trades that didn't really add up, because when my stop losses get hit, because when I enter a trade, I put my stop loss above my entry, so I'm protecting my position. So if the market does go against me, I don't lose any money. So these trades were probably like some 8-10 pips when my stop loss got hit. But one particular trade was this one, because we developed a trend line pattern along this area where we had one rejection of this region, another rejection of this region, and then another rejection. On the third rejection, I was able to capitalize on this specific area to short the market for about 45-50 pips off this region. Oh no, it was 30 something pips. It wasn't anything major. But another trade that could have possibly been taken was this past level of support right here acting as resistance, and these 3 rejections of this zone. On the lower time frame, we had this downtrend line, respected once right there, respected again, respected, but was broken and literally came back to the broken level of resistance acting as support. Guys, that sound like a record when it's scratch. Like, that's all the market really does. That's all the market really does. Just bounce from level to level, break supports, break resistance, retest them, and continue. But that's Aussie. GBP, JPY absolutely melted. Absolutely melted. And it's been melting for the longest while. Like, there was no major trade you could really get apart from just selling. Like, you could just blindly sell. So we had a little bit of a fake out right here, because this is actually the level that was maintained. This is a level of resistance that was maintained in GBP JPY's downtrend, but the market came to this level and it kind of broke it, and broken resistance acting as future support. So I had a lot of buy sensitivity coming off of this region. But buyers right there, buyers right there, buyers right there. This is a classic fake out. Like, you can't really avoid all of them, but in the long run, the market did then break back this level along this region right here, and then came back, retested it, and then started pushing further to the south side. So that's one trade opportunity we could have gotten right there. And in the scheme of things, if you actually use the highest wick in this area, the market actually did not break it. If you go on the 1 hour, the market did not break it. It just gave us an engulfing within this region, which is a clear sell indication, right? So taking sales from this area with the rejection of this zone would have given you monster pips. You'd probably still be in the trade at 181 pips. Alrighty, let's go over to gold now. Alright, you know what, again, the US dollar JPY first, because gold is going to take a minute. So USD JPY, if you guys watched the webinar I told you about the trap along this area. So we had this level of support along right here, and I showed you guys that if you were to buy US dollar JPY along this region, it would be a liquidity trap, because if you're buying right here, you're going to place your stop losses along this area, and the banks want to take out your stop losses to add fuel to their fire within sellers momentum, right? So how could we have capitalized on this sell? So we have this specific area on the H4, this area of H4 resistance. All of this area is acting as resistance on the H4. So all the market did was really come to this level and simply just rejected it. Nice, clean, simple rejections. Like, the market was behaving very, very, very easy this week. If you look at the low time frame breakdown to see where you'd actually get into the sell, let me highlight this area for you. Templates sent to back. Look at this specific spot. We had support acting all along this area in the market. All along right here was support. All the market did was just break that support, came back to it, and tested it as a simple level of resistance. I'm gonna put this to the back so you can see the wick. Send to back, boom. Support, resistance. It's a very tiny wick. Let me get this out of the way so I can see it better. Take out this and take out this. See this little wick right here? Let me circle it. Support. Little wick right here. Resistance. That's it. That was literally it. And then the market fell about, I think you'd still be in this trade. The market probably opened with a gap at this rate. But if you took the sell opportunity, you'd be down about 135 pips. Well, you'd be up 135 pips in profit, yeah? So, like, most of the trades this week were pretty textbook. Like, some simple rejections of some areas within the market. I was like, all that, if you notice what's been happening, it's just major selling on GBP pairs and major buying on US dollar pairs. If you really, I'm put on other major buying on US dollar pairs. Well, the ones that I trade, and we know why there's major buying on the US dollar pairs is because the XY is pushing to the downside. Correlations. Now gold. Like, gold was a pretty nice trade. Pretty nice trade. Simple, easy. Let's look into it right here. We have this level of resistance that was broken that acted as support all along right here. That's all that's been happening this week. Like, nothing major where you had to dive deeper into technical analysis happened this week. We had the market create a low, create a high, created a low, broke the high, did some little consolidation, came back to the level that it broke, which was the level of resistance that was maintained in this downtrend. The market broke it, pushed to the upside, came back, transitioned along this area, and then popped to the upside. Absolutely perfect. So let's dive down into this region and identify the exact buy opportunity that we could have taken off this region. We have a level of resistance right here that was broken, which gave us this perfect bullish variation. Simply go into our long position, enter in a trade right here, applying adequate risk management. You could have put your stop somewhere along the region of about 45 pips, give your trade some room to breathe, and then we'd take this trade to the next known level of support. Our next known level of support was actually this region right here, which take profit 1 was absolutely destroyed. Take profit 2 was destroyed, and hopefully we'd actually get to take profit 3 along this region. So when you're looking for your take profit regions, always find the next most relevant level of resistance that you need to break for price to continue going higher. So this would be take profit 1, this would be take profit 2, and this would be take profit 3. So that's pretty much it for Backtest Fridays this week. Oh, let me include this also. This gold buy all happened at a daily demand zone. There's a demand for gold all along this region. So even though you could have capitalized on the buy right here, there's earlier buy opportunities that happened when price was rejecting this region. Rejection right here, rejection right here, and a rejection right here. So take note of that, guys. Look deeper into it, and hope you guys had a productive week. Hope you have a good weekend, and get ready for next week, because that's all we'll do. We'll destroy these charts. Big up, guys. Enjoy the rest of the evening.